I think as plans continue to look for newer and innovative solutions to help bolster retirement confidence, annuities really do appear to be well positioned to gain traction within employer-sponsored plans.
This is 401k Specialist Editor-in-Chief Brian Anderson, and this is the 401k Specialist Podcast. The Allianz Center for the Future of Retirement, part of Allianz Life Insurance Company of North America, recently released a new report that examines participant attitudes, preferences, and demand for annuities in defined contribution retirement plans. Today, we're joined by Matt Stubblefield, Aggregator Channel Director at Allianz, who will walk through some of the report's key findings and how plan advisors can put them into practice to enhance their client offerings. We're going to dive right into it right after this brief message.
At Allianz Life Insurance Company of North America, we prioritize a holistic approach to retirement planning and income generation. Our insights and tools enhance your understanding of income strategies tailored for employer-sponsored retirement plans. Learn more at www.allianzlife.com/DC Plan Research.
All right, we're back with Matt Stubblefield, Aggregator Channel Director at Allianz. In his role, Matt's focus is on helping advisors meet the growing demand for lifetime income solutions in the defined contribution marketplace. Today, he's going to tell us about a new report examining participant attitudes towards lifetime income solutions in their workplace retirement plans. Welcome to the 401k Specialist Podcast, Matt.
Yeah, thanks for having us, Brian. Excited for the conversation.
All right, well, let's start with a quick pulse check. According to this new report, how are plan participants feeling about their retirement readiness right now?
Yeah, no, that's a great question. Let me preface this answer by saying that our survey was conducted at the end of 2024. So while it certainly doesn't reflect the current market volatility that we've been experiencing here over the past few weeks, it was quite clear through the survey that many participants are feeling ready for retirement these days. And in fact, a majority of participants feel just as prepared, if not more prepared for retirement compared to previous generations in their family. So according to the survey, half of participants expressed feeling more prepared than previous generations in their family, and 1 in 5 said that they actually feel more prepared than previous generations in their family. So certainly good findings in our study. And I think these findings reflect that the U.S. private retirement system has seen notable progress in expanding retirement preparedness in recent years. We've seen efforts to expand access to plans, improve education, and combat inertia through automatic features. And these all have contributed positively to helping more individuals prepare for and ultimately feel ready for retirement. So great findings out of our study there.
Well, it's always good to hear that the workplace retirement system is seeing progress when it comes to retirement readiness. So what would you say are the main uncertainties that plan participants face as they approach retirement?
Yeah, so although many participants certainly feel ready for retirement these days, you're right that many participants are facing uncertainties as they approach and ultimately enter retirement. And I just touched on one of those at the beginning, which is market volatility, something that we've all been experiencing recently. And this is certainly one of the top concerns for many participants. Actually, 72% of participants in our survey said that they were concerned about the possibility of a major market downturn right before they're ready to retire. And this is particularly important for those close to retirement because, as we all know, sequence of returns risk can really pose a significant threat to future retirement income. So when you think about it, a retirement portfolio generally isn't just a lump sum of cash in a savings account that you draw down to zero. It actually includes a mix of investments that provide both income and growth over time. And ideally, the growth will replenish at least a portion of what you take out, making your withdrawals more sustainable over the length of retirement that you've envisioned. However, if you need to withdraw money during a market downturn, all of a sudden selling investments when they're too low locks in those losses, unfortunately. So unlike when you're saving for retirement, that money can't grow back if the market rebounds. And this can also shrink your overall retirement savings and potentially cause these savings to run out sooner. So market volatility is certainly one of the top concerns in our study that participants shared. Another top concern is inflation. And actually in our survey, this was identified as the top risk to retirement income from participant employer-sponsored plans. And nearly 1 in 5 participants actually ranked it as their primary concern. And over half of participants, 51%, ranked it among their top 3 risks to future retirement income. And I think this makes sense because someone who is a bit earlier on in their career, they're experiencing compensation raises over time. They're seeing growth in their investments that can help counter inflation. But as they begin to approach retirement, you typically experience less of these offsets that I just mentioned. And a more conservative portfolio with more bond investments may actually reduce exposure to market risk, but it can be hurt by inflation since bond prices, as we all know, go down when inflation increases and interest rate rise. And then a third concern is also longevity risk. And this is essentially the risk of participants outliving their assets. And nowadays, as we all know, with longer lifespans, increasing the likelihood of outliving your retirement assets is certainly more prevalent. And 60% of plan participants in our study shared that they worry about depleting their employer-sponsored retirement plan during their retirement years. And this stat's actually even higher among those participants with less than $200,000 in investable assets. Nearly two-thirds of this demographic expressed concerns about running out of money in retirement. So certainly a very big concern that many folks are experiencing today. And then the last concern that many participants share is spending shocks that can quickly derail a retirement plan. 68%, so more than two-thirds of participants in the study said that they feared unexpected expenses like medical bills or home repairs that could prevent them from wanting to spend money in their retirement. So there's a multitude of risks surrounding retirement income that can pose significant concerns for individuals. I just touched on market volatility, inflation, longevity risks, and unexpected expenses that can all create a complex landscape that certainly can weigh heavily on the minds of people today.
Yeah, I'd certainly have to agree. That seems like a pretty valid list of concerns there. Now I'd like to jump into some of the details of lifetime income solutions, which is certainly, as we all know, has been a very popular topic in the workplace plan market of late. Can you run through some of the key benefits of adding guaranteed lifetime income sources, such as annuities, to retirement plans?
Absolutely. And, I think as plans continue to look for newer and innovative solutions to help bolster retirement confidence, annuities really do appear to be well positioned to gain traction within employer sponsored plans. And I think this is really for two primary reasons. The first reason is that annuities can help manage the risks that we just walked through in our last conversation that individuals are facing today in retirement. So imagine being the average participant out there trying to figure out, how do you pay yourselves in retirement while weighing all of these potential risks? And obviously, that's incredibly difficult, especially for those participants who don't have access to a financial advisor. So annuities offered through an employer-sponsored plan would actually allow these people, these participants, to address some of these risks and ultimately protect a portion of their retirement assets, which we all know is incredibly important today. The second reason I'd mention is that annuities can help provide predictable income. And, annuities offer a reliable and consistent flow of income in retirement, mirroring the stability of paychecks that participants would receive during their working years. And this is very attractive to many participants today. In fact, 86% of our participants that we surveyed said that they would prefer a steady stream of income in retirement rather than having to figure out how to spend a nominal retirement account balance throughout their retirement years. So guaranteed income can offer numerous benefits in both these ways.
Yeah, that's a very compelling statistic right there. Now, how about the benefits of adding lifetime income solutions for the plan sponsor?
Yeah, great question. I know we've talked a lot about participants so far, but there are also numerous benefits for plan sponsors to add lifetime income options to their retirement plans also. So in our survey, participants said that the ability to create a secure foundation via lifetime income would actually contribute to positive feelings towards their employer. So 78% of participants stated that this would demonstrate that their employer is both invested in their retirement preparedness and also their financial well-being. And then 74% of participants said that this would actually enhance their loyalty to their employer. So certainly some benefits from participants and employees looking at their employer when lifetime income options are included. Another reason plan sponsors should care about retirement income is that many of these products are available at actually zero cost to the plan. And this presents a unique opportunity to boost participant confidence, help participants retire on time, enhance plan satisfaction, reinforce the plan's commitment to participant well-being, and then finally, potentially strengthen employer loyalty based on the findings in our survey that we just mentioned. So all of these benefits, also without incurring additional plan expenses, can certainly benefit plan sponsors as well.
Right, right. Another topic I'd like to touch on is with a wide range of retirement income solutions available, I'm curious as to what features the new research found to be most important to plan participants who would consider adding an annuity.
Sure. So our survey took a deeper look at participants who would consider adding an annuity to their employer-sponsored plan to really better understand their unique preferences. And a key decision when designing an income program is whether to offer annuities in plan or out of plan. And our survey results reveal a strong preference for in-plan solutions. So nearly 8 out of 10 participants surveyed favored contributing smaller amounts through payroll deductions over time throughout their working years, more so than a one-time lump sum purchase at retirement. And I think this seems to make intuitive sense because many of us are familiar with the behavioral advantage of contributing smaller amounts over time to a goal and how psychologically that feels a little bit easier and a little bit simpler to stick to and commit to over time. And even in plan, there are many different annuity types available. Not surprisingly, when it comes to product design, protection against key risks is obviously very important. And plan participants, they highly value full protection from market downturns, as we mentioned, with 50% of participants ranking this feature as one of their top 2 most desirable features when it comes to lifetime income. They also value growth potential to help address inflation, with nearly half, 47% of participants ranking this in their top 2 features. And then finally, flexibility. And the flexibility in when and how to take income was also a top feature, as 41% of participants ranked this in their top 2 features. But with that said, I think this is one of the interesting findings in our study, is that when participants were not asked to rank the features 1, 2, 3, 4, the vast majority of participants actually said that all of these following features would be desirable. So features like portability to an IRA without any changes to guarantees, benefits, or pricing, flexibility in income payments, the ability to take a full or partial withdrawal after income is started, growth potential, and then ultimately protection from market downturns as well. So while they first and foremost want to be able to use the annuity to manage risks, participants also value the adaptability as their needs and priorities evolve over time.
Interesting. Okay. All right. Now let's dive a little bit into some demographics. Were there any interesting insights in the research about which demographics were the most interested in guaranteed lifetime income solutions?
Yeah, no, Brian, absolutely there were. And the first, which was a bit surprising for us, was that our study indicated that millennials of all the generations were actually the most interested in including annuities within their employer-sponsored retirement plans. This was then followed by Gen X and then ultimately followed by baby boomers. And while this doesn't necessarily mean that younger generations should be contributing to these types of solutions quite yet in their early age, they also recognize the benefits, though, of guaranteed income for life. And I think this growing interest from the younger generations may be driven by a few concerns. And one of those concerns is potentially the future limitations of Social Security, which is obviously a hot topic in the press these days. And another is a decline in access to traditional pensions, those defined benefit plans that many of the previous generations were able to rely on. And then finally, I think it's the younger generation's desire to proactively handle the challenges of funding their own retirements. And there are many ways to obviously do that these days. And specifically within our study, 78% of millennials said that they would actually consider adding an annuity to their employer-sponsored retirement plan. This compared to 72% of Gen X and then 64% of baby boomers. So they're also more interested in personalized advice as well to help them manage annuity contributions, with 64% saying that they would be willing to pay a fee for a personalized advice service to manage annuity contributions, compared to 50% of Generation X and 43% of baby boomers. So certainly more interest from the millennial generation in terms of personalization and personalized advice when it comes to retirement. And then looking more across demographics, we also see Black, African American, Hispanic, and Asian American participants have actually shown a higher interest in annuities within employer-sponsored plans compared to their white counterparts. So 81% of Hispanic, 78% of Black African Americans, and 75% of Asian American participants expressed interest in learning more about annuities as part of their employer-sponsored plan. And compare this to 65% of white participants. So certainly a higher percentage in the other demographics. And I think a wide range of factors contribute to this heightened interest, including increased concerns about certain retirement risks that we've addressed, as well as a lower reliance on outside investment accounts among Black, African American, and Hispanic participants. So 28% and 31% of Black, African American, and Hispanic participants, respectively, expect to rely on personal investments outside of their retirement plan. Compare this to 42% of white participants. So there are certainly numerous factors to look at across both generational and ethnic demographics.
Yeah, there's a lot of detail right there. I'm certainly encouraged to hear about the millennial interest. All right, let's switch gears a little bit now. Can you tell me about the role personalized advice can play to help manage annuity contributions and overall retirement planning?
Yeah, absolutely. So going back to our survey results, we see that close to 3 out of 4, so 73% of respondents say that they're interested in the idea of having their annuity in their employer-sponsored retirement plan, but they would require additional assistance in determining how much to contribute. And I think this is really where personalized advice can make a strong impact. So as we all know, every person, every participant situation is different. What throws one person off track for retirement might not factor in quite as much for another. So that's really where the one size fits all strategies that allocate a specific percentage based on age alone can unfortunately fall short. But a personalized advice program, such as a managed account program, can offer additional protection from these personal risks by tailoring the strategy to meet individual needs and objectives. And managed accounts in particular, I think, do 3 really key important things. The first is they can help analyze a participant's situation. Managed accounts can help optimize portfolios for certain individuals based on their needs and based on their unique preferences, using a wide range of data points and also inputs from the participants themselves. The second is it can help match participants with appropriate tools. So managed accounts, they carefully evaluate all the options in the core fund lineup to ultimately make recommendations for each participant based on their unique situations and individual risk tolerances. And then finally, I really do think managed accounts can help simplify the process. They can help streamline the adoption of guaranteed lifetime income products through things like automation. And they can also help decide when and how to allocate to the annuity for the participant. And they also do things like simplifying enrollment while still maintaining personalization to participants. So certainly a lot of benefits, I think, in the managed account world. And finally, these programs, they also provide access to a human to help participants navigate key decisions and ultimately provide somebody for participants to turn to if they do have questions and they would like more personalized advice from a knowledgeable expert. So numerous benefits for personalized advice and also managed accounts in our view when it comes to retirement planning.
Right. Lots of helpful stuff there. All right. Well, we've certainly covered a lot so far, but to close out, can you tell us about some of the next steps that advisors should be taking or at least thinking about regarding lifetime income solutions?
Yeah, great question. And I think there are 3 key steps advisors can take when looking at lifetime income. And the first, which I think is incredibly important, is to get educated on the different solutions that are out there. There are so many different solutions these days, and all solutions have different features. So I would recommend that advisors gather information directly from insurers to obtain detailed knowledge about the features, benefits, costs, services, and ultimately the support models of each product available. And this will ultimately help advisors make informed decisions regarding the most suitable options for their clients, both within and both outside the plan. The second thing I'd recommend is to choose an evaluation framework for comparing guaranteed lifetime income solutions. So there are numerous tools out there at the industry today. One I'll mention is Nestimate, and many others can provide valuable insights into how different annuity products align with plan priorities and participant preferences. And then finally, begin to think about identifying potential plan sponsor clients who could benefit from offering guaranteed lifetime income solutions. And I think one way to do this is to identify clients who are concerned about the participant retirement readiness and also plan sponsors who are open to innovative solutions. And I think newer plans these days, for instance, may be more open to innovation. Also, those plan sponsors who have previous experience with defined benefit plans might be a good fit since they are more familiar with the value of a guaranteed stream of income in retirement. But it's important to be having the conversations with plan sponsors. And, we at Allianz, we're here to help in any way that we can.
All right. Well, you have certainly covered a lot of great information. And with the lifetime income being such a big topic of conversation in the workplace retirement plan market, Matt Stubblefield, Aggregator Channel Director at Allianz. Thanks for joining us today to share some of these new insights on the 401k Specialist podcast.
Thanks, Brian. Enjoyed the conversation.